VIKAS KHEMANI, President and CEO of EDELWEISS Securities, now joins us. VIKAS, hi, good morning.
Good morning.
We've seen a big rally, but the last few days have been a bit volatile. Do you think it's a bit of nervousness ahead of budget, or is it because of what's happening in Parliament, or are we making just a bit too much noise about essentially what's a bit of a consolidation after a strong turn?
I think, if you see, there has been a reasonably good amount of rally in the recent past, and a lot of expectations are kind of, I think, built in the markets at this point in time. So I think markets are sort of waiting and watching in terms of what moves government would have in the budget, and obviously there is a little bit of sort of nervousness around this, how this session goes vis-a-vis opposition with regard to some of the bills to be passed. So I think those sort of nervousness kind of get reflected sometimes when markets are slightly heavier. I mean, if you look at markets are, in my opinion, in a reasonably overbought position. If you look at the leverage position, if you look at the kind of flows we have had in the past. So I think, and also if you sort of juxtapose this with the kind of quarterly earnings we have had and quarterly earnings which we are expected to have in next couple of quarters. So if you combine all those things, markets are looking a bit heavy at this point in time. So in this kind of situation, typically market would be a bit nervous and would wait for the event to sort of get over, hoping that there are no major negatives. So we think that this budget is going to come on the back of high expectations, and quite a bit of those expectations have already been laid out by the government. So I don't know what new kind of they can sort of say in the budget, but yeah, obviously a market would watch out what kind of fiscal quality numbers they show, what kind of growth orientation policies they adopt in the budget, and market will take a direction. But unlikely that market would resume a new sort of bout of rally post budget, given what kind of base we are sitting at, and hence I think sort of markets are behaving the way they are in the current situation.
Okay. Vikas, hi, good to see you in today. The banks, especially the PSU banks, have been stark underperformers for this series. Would you take this as an opportunity to, say, accumulate the likes of a PNB, which is down around 14% on a month-to-date basis itself?
So I think PSU as a bank, as a basket, as a sector, PSU banks, we've been, sort of positive from a medium-term to long-term perspective. Short-term, there might be nervousness given the fact that the kind of numbers we have had in this quarterly earnings, and probably similar kind of situation might continue for one or two more quarters. And I think to make the matter worse, some of these larger banks are also without a leader in place. So I think you don't have chairmen and managing directors in place. So I think that to that extent, the future direction becomes all the more unclear. So I think that's the reason you've seen this kind of underperformance, this kind of performance in the market. But if you look at from a medium-term to long-term perspective, and if you look at what governments are trying to do, a government is trying to do in terms of fixing the long-term problem, I do feel that there is a lot of inherent value hidden in public sector enterprises. One side you have private sector banks which are sort of reasonably richly valued. Obviously they have a lot more growth and a lot more potential to grow. At the same time you have undervalued or on a relative basis public sector enterprises. If the turnaround happens, you might see superior returns coming through. But I think in shorter term, we believe that next 1 or 2 quarters, public sector enterprises, banks might continue to remain in the similar kind of performance zone, backed by the asset quality, and till the time the issues at the board levels are not addressed. And I think if you look at 1.5 to 2 years kind of period, then they would probably do well.
Because the big hope was on the oil and gas sector. Do you think some of those hopes have been belied? I mean, we've seen ONGC go back to almost 300 now. At 400 it looked undervalued, and now it's back to 300. What's your call on some of these names, and how would you? What would be your advice on how to play some of these upstream companies in particular?
See, upstream companies directly linked to the oil price, right? I think so. And ONGC's underperformance is not sort of a surprise. If the oil price goes down from $100 to $60, obviously they have to sort of take an impact. Obviously, partly ONGC gets hedged because to that they were already sort of taking subsidy burden, and their realization was lower than $100. But at the same time, I think when your oil prices have gone down so sharply, you don't tend to benefit. So if you don't have any specific trigger going forward, why would you bet on a stock like ONGC in a significant manner? So currently, according to me, any sort of major sort of triggers are missing in upstream companies. Better you are sort of positioned or in downstream companies, given the fact that now it is market linked play. You have no more subsidies to take care. So hence you are much more better play. You can see valuation upside coming through if government continues on its path of giving them the free hand on the pricing. So I think currently in our experience, investors are more preferring downstream companies over upstream companies. Obviously, once the trajectory on the oil price becomes clear, currently I think still there are divided opinion whether it is going towards $40 or $80. I think accordingly sort of the ONGC's performance will be decided. But currently, in my opinion, there are no major triggers for investors to bet heavily on ONGC. There are much better opportunities in India, which are sort of a lot more better placed.
Okay. Vikas, just a larger market perspective question, something that I asked Anuj about earlier as well. How important is maybe the railway budget tomorrow to possibly set an idea or an expectation from what we could expect on Saturday?
It is very important from a point of view. I think if you see, during the election campaign, Prime Minister had said that, railway will be his engine of growth. And if you look at that intention behind that statement, obviously you are expecting a lot more investments coming through in the sector. You are expecting a lot more revamp to happen in this sort of department, and fact that he has got a very capable man in charge in Suresh Prabhu to drive this change surely expresses a lot of intentions of the government behind making this whole change in the railways. Railways has a lot of structural problems. They need to be addressed, but they cannot be addressed in one sort of budget. So I think more importantly, the direction of the budget, what kind of they say in terms of investing in this sector, because railway, there's no significant investment has happened either on the safety count or augmenting on the capacity, building more efficiency in the freight transport. So all those things needs to be done. And how do you sort of reduce losses? How do you get resources for? So I think on those counts, what kind of direction it sets is going to be very important. So market would be looking more from a direction perspective, that what kind of vision they are bringing out together. And obviously, the impact of that on the ground would be felt only with a significant lag. But I think market's going to read out more on the intention and how government is planning to make this as an engine of growth.
Okay, because from the union budget point of view, how would you play stocks in the infrastructure space, and what are your expectations there?
No, infrastructure is a very broad category, so you really can't take that as, I think one thing is very clear that one would watch out how government is sort of going to boost investment into infrastructure build out, and infrastructure is roads, ports, railways as we spoke, and I think lot again the entire power segment, so gamut of things. And I don't think there's one initiative which can address all of them. So I think one will have to look at how they allocate resources on some of their flagship programs like Clean Ganga or Swachh Bharat, or so where, or building roads, which they've been talking about, and how they kind of sort of give some incentives in terms of making their kind of program to make manufacturing viable. So I think that will be really key and important. According to me, probably the biggest impact would be on the EPC companies, because if government expresses the intention to sort of spend more on building the infrastructure, the biggest or first-hand beneficiary ends up becoming the EPC company. So I think that is how probably I could derive some sort of linkages. But I think in this budget, one thing is entire market and everybody is expecting that what this government does to sort of start the capex cycle, start the infrastructure build out, whether through direct spending or through PPP model or any other model. And hence I see probably EPC companies are the only first-hand beneficiary of this.
Okay. Vikas, how have you read the news about, a couple of these companies which have had heavyweight investors actually come and pick up stake, or the likelihood of it? We saw that with Suzlon, we are hearing that with ABG Shipyard, and we're hearing that with Pipavav as well. Your thoughts?
So I think it is very clear that I think in last 4 or 5 years, some of the companies which betted on upcoming future very large potential opportunities, because the opportunity did not come by in last 4 or 5 years, they went into some sort of stressful situation. Having said that, those opportunities still remain, and with the government's intention to make them bigger, opportunities only become a lot more sort of viable and potential from a future perspective. Now, if the company already sort of is invested into that, they are into some sort of stress balanced kind of situation, they are into a bit of financial mess. So if the opportunity is real, and which it is, then I think some of the investors which are with sort of good cash flow, good potential balance sheets, they can back them up and create this opportunity from here. So one set of investors have brought the opportunity and created the asset so far, and people with sound financial backgrounds can come and support those balance sheets further to capture these opportunities from here on. I think this kind of trend is available, and this kind of situations are there in lots of sectors in India at this point in time. And that trend is visible. I think we are already seeing solid players buying out power plants, solid players buying out some of the road assets. So, people are looking to evaluate even shipyards, defense opportunities, wind opportunities. So I think this trend will continue. As the confidence builds in the economy, you will see some sort of consolidation in various sectors, especially sectors where there were financial stretching happened over the last couple of years.
Okay, fair enough, Vikas. Any disclosures you'd like to leave us with?
I mean, I've avoided any stock comments, but even if I have said, please assume that I would have, or my company would have some sort of vested interest in that.
Okay, fair enough. Thanks very much for joining in and talking to us.